All right, everyone, welcome back to the channel. Thank you for tuning in to another great video. I want to talk about support and resistance today, and simply the reason why I primarily 99% of the time will not trade it. Okay, if you've been following the channel long enough, you know that I trade what? Supply and demand. There's a reason, there's a purpose, and I'll briefly touch into that or talk about it. But if you've been following the channel, watching the videos, you already know why. Okay, supply and demand is very powerful. It's universal. You can trade it across no matter the market that you actually trade. And you can do that with support and resistance too. I'm not trying to knock anyone that trades specifically the break of an area of support or resistance or a level. It's just everybody has their own strategy in how they trade within the markets, correct? So, but for me, I look at the opportunities that unfold, at the origination point. Okay, what was the serving purpose? Why the market moved away from that area? Okay, it's kind of like you see the impulse moves and you say, okay, where did it start from? So you start to question, why did that happen? All right, and there's reasons why. And I'm not going to dig deep into that at all. I just want to talk about support and resistance and what happens a lot of times when people get into a trade and they trade the break of a area of support or resistance. And I'm going to show you an example here what I'm talking about. Now, does this always happen? No, it does not. Sometimes price will retrace back to a key area of support or a key area of resistance and then take off from that area. All right. But to me, it's as if once price breaks an area of support or resistance or through a level and pulls right back to that area, you're almost trading at the 50% or a halfway mark of where price made a move from. Okay, and I don't want to be trading in the middle of something. I'll say that again. I, as a trader, do not want to be trading at the middle of something right when a event unfolded at the end of it. Okay, I want to get in where the move started at. All right, so let's talk about that. I'm going to show you an example right here in which I have on my chart. And then I'm going to switch over and try to, see if I can pick up a few trades today within this video. Hopefully, I know the the S&P 500 has been kind of stagnant, not a lot of activity. Volume will start to pick up as we move into the month of September and people start to get back to work and that their kids are off of school and they can kind of settle in. That's typically when volume starts to pick back up. Traders really start to heavily be more active in the market. Sometimes it's a time where people take that 3.5 months off to vacation, spend downtime with their families. But let me go ahead and show you right now what I'm talking about, okay? Now, if you've been following the channel, you know part of my strategy in trading supply and demand is a breaker structure. It is probably one of the most key essential points or parts to the strategy. Now, it's not all of it, okay? There's a step-by-step process or rules that I had to see each thing unfold in order for me to consider an area high probability zone. Now, what we have first and foremost, okay, we're going to talk about support and resistance, all right? And I'm going to show you what I'm talking about when it comes to supply and demand, all right? So take a look here. Now, we can see price doing what? Making lower lows and lower highs, all right? That's following market structure, following what the the path, the direction of what the market is printing on the charts for us. It ultimately comes down here and makes a low, okay, off of this leg to the downside right here, all right? So what we see unfold then is when we get, most people like to say reversals in the market or I could call a shift in the structure of the market. We get this low here, and then price turns around and starts making a high here, higher low, higher highs, higher lows, higher highs, correct? Look what happens. We have an area structure right here. So price pushes up, pulls back, and breaks higher, making a new high. It takes out structure, what a lot of people will classify as an area of resistance, right? And it is resistance, okay, because it came off this swing to the downside right here. So there is resistance right there. But, excuse me, it's also an area of structure that price has broken through. And as the market continues pushing higher, it breaks through structure right here as well at 44.94. So what most support and resistance traders would do is look for a swing area, an area of support that aided in the breakthrough resistance, okay, which would be this area right here, okay? So price pushes up, pulls back, breaks hard, takes out resistance, right? So what most support and resistance style traders would do, they would look for an opportunity for a pullback to an area of support, again, that aided in that break of a level, okay, or through an area of resistance right here. Price comes back here. They look for, any means of rejection, and then they get into a trade. Now, let's blow this up because I want to show you what unfolds, okay, and what happens. All right, so when you take this trade on this pullback right here, first of all, let's just pull a fib, okay? I just want to show you. I don't trade, fibs. I'm not saying that fib retracements can't be a tool to use as a means of maybe supplying extra confirmation in a sense when you're trading. Not knocking anyone who trades fibs at all, because fib retracements can be used as part of your strategy, okay? They can be a very viable part of a strategy, okay? But I just want to show you, okay? So if we look from, let's just say, actually, let's redraw this. Well, yeah, let's redraw this, okay? Go from here to here. Okay, from here to here. All right, so the move started from here to here. This is a hump. Let's just say this is a push to the upside, 100% move to the upside here, okay? And when price starts to pull back, okay, it's pulling back to this key area of support right here, which most support resistance traders will be looking for, a key area. In this case here, support, because it broke through a level, which means it broke through resistance, right? So price pulls back to support right here. And they will be looking to go long, okay? All right, once price bounces off of this area of support right here, okay? Now, this right here is the 50% area of this push or this impulse move to the upside right here, okay? This push to the upside. Now, to me, I do not want to be trading in an area where I saw price push to the upside, okay? Here, all right? Which means that it broke structure right here to the upside. I took out this level right here. I don't want to be looking for opportunities to trade primarily at a 50% area of a leg, okay? Because, as I said before, trading in the middle of something is not the best area to trade at, okay? And sometimes they work out. I'm not saying that, oh, don't take those type of trades or that they'll never work out. I'm not saying that at all. I'm just telling you that look for higher probability areas to trade from, and that increases the probability of the trade going to your favor, all right? So, 50% area right here. Price pulls back, not even to the 50% area where there's an area of support resting right here. We'll say, I don't know, 65% area, 64% area, whatever the case is, somewhere between 61.8 and 76.4. It pulls back to this key area. Let's get rid of the fib now, okay? Pulls back to this key area right here of support. People who trade support and resistance may be eyeing that, and then they get into the trade to go long, right? And look what happens. The moment they get into a trade, yes, it goes into your favor, maybe a few points. And then the market turns back around and flushes you out. Let's say you put your stop at the bottom end right here at the back end of this key area of support right here. Look what happens. The market takes you out. Or let's say you put your stop right here where you got into the trade. Let's say you waited for this candle here to close here to the upside. You got in here and you put your, you put your stop here at the back end of 44.89 3/4. The market pushes up a little bit, stops you out. Or if we put it back here, okay, at 44.86, your stop, what happens? Pushes up a little bit and stops you out, right? Okay? So, you have to understand, in a lot of times, when price breaks through an area of structure or takes out an area of resistance, okay, and you may have an area of support resting right here, okay? And this can be classified as an area of demand as well, all right? Look for the opportunity to take a trade back at the origination point. Nowhere in between the higher end of this move to the upside, this leg to the upside, or the middle area. Try to get back down into a trade somewhere. Let's just pull a fib again. All right. Okay. Back down, I'd say below the 38.2 or down here at the 23.6 area. That's going to pinpoint an area at the lower end of this leg right here where the move started from. So if we see an area, say for instance, of supply and demand back down here, this area here, at the lower portion where the move, okay, meaning where the banks and institutions took interest to take out an area or a level or broke through a key area structure, I'm going to classify or mark off that area of demand, which is demand down here versus being up here, okay? Because the higher up on a leg, say for instance, okay, on a move to the upside here, you know, you got to start to think, is price exhausted when it pushed up there? It pulls back to this key area right here. Should I be looking for, you know, trades at the higher end or the middle portion of a leg. No, try to get in where the move started from. It makes sense. Trust me. Okay. And that's the reason why I love supply and demand, because I'm looking for opportunities where the push originated, where, you know, the banks or institutions started filling orders back at the beginning point. Okay. So let's say you got into this trade again when price pulled back to this key area right here. All right. This is support. Okay. All right. It's also a demand zone. But again, I don't want to trade at the higher end of this leg here. I want to look for the opportunity back down here. Okay. What happens is, and people simply don't understand this, when you get into a trade right here, okay, took that long entry right there, you become part of liquidity setup that the banks and institutions are looking for to capture you. Okay, they're looking to trap you is what they're trying to do. So you get into the trade right here, okay, right here at support, all right, and then they push the market up a little bit, and then the market falls and collapses. They take out and run stops all the way below this area of support right here at the back end at 44.86 and a quarter. All right, then the market turns back around. Remember what I talked about when they start to run people's stops or stop traders out? What do? They typically turn the market back around to make a move back to the upside and take out some means of liquidity, and then the market may turn back the opposite direction, which it did. So here was the opportunity. Even though the market started pushing lower, okay, and if you got in right here, you know, on the pullback to this area support, you were part of a liquidity trap, okay? That's all it was right there. Market pushed up, they allowed the market to push up, okay? Then the market pushes lower, stops you out, okay? So they started running stops. Then the market pushes higher just to come back down and test this area of demand down here. This was the area, the lower extremity, okay, or origination point where the move to the upside started at, okay? Puts us around that 23.6 whatever area, okay? Back down here where the move, all this aggressive buying starts at. So, yes, it does push up higher, but I would be interested in looking back down here to look for an opportunity to take a long, all right? So, just think about when you take trades as if you're a support and resistance style trader, or you trade support and resistance, and you're trading the upper end or extremity of a move to the upside after it's taken out or broke through a key area of resistance. Try not to get into a trade or look for an opportunity strictly right back on a pullback at the upper end of that extremity there, because more than likely you could be in a position to where you become part of a liquidity trap, okay? All right, and they stop you out. You know, you get into a trade. People talk about this all the time. I have people that contact me and say, well, I took a trade back at what looked to me as a nice support zone or support area, and then the market stops me out. Yeah, you have to understand, okay? All right? Especially when you have all these imbalances resting back in between these candles, these fair value gaps, and then an imbalance resting back here at the key area of demand right here. It makes sense. The market has to come back and fill those areas. A lot of orders took place right here. There were a lot of, excuse me, my computer kind of froze up here. Fair value gaps right here. And then you have this nice imbalance resting right here back at the demand zone. Look for price to come back there, okay? All right, it increases the probability of the trade going in your favor to where you do not get stopped out at. Look to take a trade at the lower portion or lower area where the origination point or where the move started from, okay? All right, I want to show you an example where, you know, price came back to a support area, say for instance, and it did work out, okay? There are lots of times where the trades may work out, support resistance trading, but just think more logically about things, because I want to show you where people get scared and they possibly jump out of a trade if they trade support resistance. In this case here, support, okay? So, price moves lower on this push to the downside, starts making lower lows and lower highs. We break through an area structure right here, and then it makes this low right here. All right, turns back around, pushes higher, takes out resistance right here, right? Okay, takes out resistance, so it breaks through this area of resistance. We have a support area right here, right? Okay, all right. So when price pulls back here, it tests the area of support. So look, you're not even waiting for price to come back and fill in this imbalance right here. Okay, where price swung to the upside right here, taking out this area of resistance right here. Okay. If I said support, I meant to say resistance, guys. Please forgive me. This is a support area that took out this area of resistance right here, okay? So there's an imbalance within this swing or move to the upside right here, okay? Traders allow the market to come back, all right, and it does, retraces back. Right here at the, let's say, I don't even want to say the neck, or I'll say the pretty much the head of the swing to the upside right here. So this would be, you know, kind of the neckline or head. This would be more so the body and the bottom end right here. So they're waiting for price to pull back right here. All right, there's an imbalance resting right here. Okay, logically speaking, you would want price to come back and even test. You would want it to come back and test this imbalance as well, right? So price pulls back. They get into a trade to go long, right? Right here at support. The moment, so they're in the long, and you know price does push up a few points here, but then it starts to pull back and retrace. And let's say you're someone that has your stop loss resting right here, okay, at 25.5. And then price comes back to 26.5. It's 4 ticks away from pretty much almost stopping you out. What happens is people at that point, and you got in right here, so this is your break even point right here. You got out right here. Yeah, you're still in a profit, but the fact of the matter is that you didn't take much profit because you got scared out, right? Scared of the market. The better opportunity was to allow price to come back down at the lower area here where the move started pushing to the upside here, okay? Again, I want to just show you a fib. Again, I'm not trading fibs. I'm just showing you. All right. This was the halfway point right here, primarily where people got into the trade at. Okay. This was the lower portion of the area where you should have taken interest at, because the move started here with the aggressive buying to the upside that took out resistance right here. All right. So look for price to come back down to an area where there are imbalances that need to be filled at the lower portion or lower extremity where the move started from, okay? And then look for the opportunity for price to push high. So if you wait for this pullback to the lower extremity around that 23.6, 23.8, or 32.6, 32.8, whatever it is on the fib, let's take a look at it. I think it's, I'm gonna run it again. Yeah, 23.6, 38.2, whatever it is, okay? If you wait for price to pull back around to this zone here, as it did, okay, fills the imbalances on the move back or retracement back down to the downside, then look what happens. It takes off to the upside, okay? So the trade opportunity was better to take it here, because if you got in here right at support here, okay, around the 50% area, price pushes up, but then you may have started getting scared out when price started pushing to the downside and you jumped out. So you got into a trading opportunity, and all that does is increases the fear factor to when you start trading areas. Say for instance, this example of support here, and the moment you get in, and then the moment price starts pulling back away, you want to into the trade, you keep doing that, you keep increasing your level of fear, and then it allows you to start, anxiety starts stepping in, stress starts stepping in, and then you can't quite understand why are you, you know, taking bad entries in a sense. I'm not saying that it didn't work out here, because it did. It pulled back before pushing higher. But ultimately speaking, the trades tend to work out better when you get into them at the lower extremity where the move actually originated from. Okay, especially again if there's an imbalance resting back at an area of demand in this case here, or at an area of supply. So just try to practice that, and trades will more than likely you'll see an increased higher probability of doing so versus trying to trade every pullback at the upper extremity, you know, above the 50% or higher area, versus allowing the market to come back to the lower extremity of a move. Okay. Now, did this trade work out? Yes, it did. But when it came back here to support right here, all right, and again push the market higher, look, they could have came right back down here, okay, and took out right here if you put your stop here and below here, as I showed you in the last example. So, increase your probability, increase your chances of taking and having a higher win rate by allowing the market to come back to a zone that makes more sense, because you're getting in at the move where it started from. Especially, again, the imbalance is the key, okay? If you have an imbalance at the lower extremity of a move, okay? All right, so I'm switching over now because I want to look at the market now, okay? So I didn't want to talk about and beat support and resistance, and the reason why I do not primarily 99% of the time trade support and resistance, why I strictly focus on supply and demand. All right, and hopefully you guys can hear me just fine. So let's take a look at the market as a whole. I'm looking at the S&P 500. Yes, I have been doing some trading off of the NASDAQ recently, but as it stands right now, we tapped into the early part of this morning around London session to this key area of supply right here off the 60 range chart. And looking at the market, I would have more so right now a let me take a look here. Kind of a bearish sentiment. We're in a wedge. You know, we have a high, I mean, a low here and a high here, so we're in a wedge. But I still kind of primarily focus on shorts right now, and looking at the higher time frame. But you know, if we start to break above, then my sentiment of looking at the market or bias would switch to looking for longs. But this is a key area of supply right here, and we see prices bounce from it. It did bounce right here at 4 o'clock this morning. Where this red line is at, that's supply off of the 60 range chart. All right, so let me scale down to the 12 range chart right now, and that was that area right here. Well, 3:40 in the morning. Okay, on the 12 range. Okay, and price rejected that area. All right, so it pushed back to this key area of supply off the 60 range chart, and then we got a break of structure to the downside, taking 44.38 out. Okay, so yeah, I mean, you could have been definitely looking for shorts. All right, but now we are still continuously pushing higher. We're still in that 60R supply area. If you can't see it, I'll draw it for you right quick. Rectangle. Let's just do this right quick. You see this? We haven't broken through it yet. Okay, so price still could possibly reject it, but it did come up here and fill that imbalance in back at the zone right here. All right, so you know, it could be a possibility where the market just wants to continue pushing higher now. Now we do have, you know, a move where price pushed up, retraced pretty deep. It did take out some structure right here, and it could push higher. But ultimately, like I just said, we're in this wedge where there's a high resting right here and a low here. So price is wedging. That means it's moving sideways right now. So be careful when price is doing things like this, trying to get trapped, because that is a goal or a technique they use to trap traders out or stop traders out. All right, so the market is pushing to the upside. I will say this. Let's see, it pushed up here, pulled back. This is on my 12 range chart, my lower time frame. Let's see. It broke structure right here, and this was at that 60R demand zone, above 44.54 here on the 12 range, but it didn't pull back. So, you know, a lot of times you guys will see me counter trend trade or go against the grain from the higher time frame. I don't recommend that if you're inexperienced or beginner trader, because most times I'm looking for short-lived scalps, whatever the case is. But it primarily, again, it's off supply and demand setup. So, you know, let's say for instance right here, price pushed higher, pulled back, and then broke higher and broke structure right here. I'd have probably been looking for a pullback. Let's see if we have any means of imbalances. So prices fill these imbalances right here. So possibly, you know, even though this may have been, you know, maybe at the 50% or area or so. I'm not trying to contradict myself, but let's see. Well, here we go right here. This would have been a decent area right here. Because we have a high volume node right here at 41.5. Okay, so let's just say if I was just to pull a fib and just show you right quick, this would have been around the 38.2% area of a move. Okay, right here to the upside after breaking structure right here, pull back. We will be below this high volume area at the lower end of 38.2 or lower end of this move to the impulse move or move to the upside right here. So my interest would be right here. So what I'll probably do is I'll just put a marker there, just say for instance, because price could come back here. I'm not saying that you just have to pay attention to market structure and price action when price does get back to an area, because price could turn around here, unfold, or fold to the downside and start breaking structure back down to the downside. In that case, I'll be looking for a short. Okay, but right now it's pushing to the upside and it's just trending in one direction right now. All right, so on the NASDAQ, I'm looking, let me blow this up a little bit because I need to look to the left-hand side of my chart. This red line that I marked, I'm going to show you right here. This could be a key area of supply. Demand, not supply, guys. Demand, as it broke some area of structure here to the upside as it moving higher. So I'm squeezing it together so you can see. I know it's kind of hard to see, but it's breaking through some areas here to the left-hand side of your chart. And I talk about looking to the left because you got to be able to see what's going on to the left-hand side of your chart. Because if we're just looking at today's price action, you know, and then we look look yesterday and the day before, we don't see anything, right? So we have to go all the way to the 24th, which I believe was last Thursday. Again, this is a 60 range chart to see what unfolded or what took place, or to bring some data back into the picture here, as far as areas of price action. Okay, some activity in the market. So price is breaking higher here. We do have all these See this aggressive push to the downside right here? You know, this gaps are imbalances and fair value gaps all the way back up to this area here, okay? So price could run up there today and push higher. If we look at the higher time frame, which I'm using my 60 range chart, we're bullish. We're bullish on the NASDAQ. Not only are we bullish on the NASDAQ on the 60R, but on the 12 range chart, my scale down chart or lower time frame, we're bullish just as well. You can see, you know, price is still swinging to the upside. So just have to be mindful of that. So I personally would like to see some area or pullback to go long possibly on the NASDAQ and possibly fill in some of those areas on the 60 range chart, because you know the market looks like it's definitely trying to pump to the upside. But it's moving though on the NASDAQ. Yeah, so it's just a matter of trying to figure out where to get in at. So I'm gonna wait and see here. Look at it, it's just pushing. Gosh, I want to pull back, guys. I want to pull back. I don't want to. I want to take it back up to this area right here. All right, and try to, you know, get into a trade. But the market is just really pushing right now. On here on the NASDAQ, I need to put my stop up here. Oh no, don't grab it. I'm gonna put my stop up here around this area right here. So I'm looking for price to push higher. Okay. To move to the upside. I'm looking at here in a 60 range chart. I entered a trade here. I was trying to enter a trade here on the pullback, but didn't quite get filled there. And because price was just moving so quick. So, all right, let's see here. So, come on. I think it's going to continue pushing higher here, so I need to be careful here. Yeah, I'm going to move my my target down just a few ticks here. Whoops. Right there. Let me blow this up a little bit so I can see what I'm looking at here. All right. Maybe just one tick lower. Well, let's see. Right there. I'll leave it right there. Can't really see much here in the 12 range. I had to really zoom, you know, squeeze things together to see what I was looking at. All right, we're still pushing higher here. Okay, come on, baby. Push up. It's approaching my profit area. I may take out. I'm looking, guys. I'm looking. Come on, come up this area up here. Let's see here at 86.5. Could come back to this area. Keep pushing. I'm looking to get out here at I think at right below 19.5. So, all right, I may take out if it starts to show me any signs of rejection at this area here. So let's see. All right, I'm up 21, 22, 23, 24, 25. All right, I'm taking out right here. All right, right, I think right at 22 is what I took out at. Okay, so I saw it start to reject in this area here. Second candle to the downside. I went ahead and got out. I'm not saying they won't continue pushing to the upside, but that's fine. I went ahead and took profit. All right, so you see what I was saying? Let's go back to the 60 range chart. See it? That was the area I was aiming for right here. Had I left my original TP sitting at here at, I think it was sitting here at 05 or 6 area, somewhere around there, I probably could have picked up 27, 28 points on the NASDAQ on that trade right there. But I started seeing it pull back some. I went ahead and got out. And it went right to exactly where I thought it was going to go, to this area up here. Right here where you see this. Let me blow it up for you. Okay. This is an area of supply resting right here around 42.75. Hasn't gotten it yet, but it's aiming for this area here. Okay. Because this is price is making lower lows and lower highs, breaking structures here to the downside when price moved lower here. So you can see it tapping into it now. It's right at 27 or 28 area. So the trade was valid. You know, you got to look at. I was looking for confluence. You know, higher time frame. You know, showing bullish activity, lower time frame showing bullish activity just as well, and that's why I got into the trade there to go long. Okay. I tried to get it more so into a pullback, but the market was just taking off, and I knew it was going to rip to the upside there because it's got to fill in these imbalances or gaps. Okay, so that was a beautiful, beautiful trade to the upside on the Nasdaq. If I was talking about placing a stop, whatever I said, I meant my TP, my profit target. I was just so involved, my mind looking at these areas and trying to think about the trade I was in and trying to talk at the same time, but I was getting a little confused there. I was talking about my profit target, where to put it at. The market was just ripping to the upside. So. But anyways, beautiful trade there on the NASDAQ. One trade on there so far, 180 ticks, as you can see right here. So 90 ticks on both contracts. Okay, so I'm going to pause and wait to see. Let's see where did it end up going to before it bounced. 26 and yeah. So see, it came right back to this area. This is an area primarily. We're in an area of resistance, okay? But I trade supply and demand. I'm not trading resistance. I'm looking for price. If it comes back, maybe look for some opportunity at a supply zone, not resistance, okay? So beautiful trade. That may be my one and only trade for today so far, but I'll look to see what unfolds. And take a look at here at the ES right quick. Look at that. See how the NASDAQ was just rushing to the upside there? And was looking to fill that area I just showed you here. Okay, you had all those imbalances of gaps resting. Blow it up for you so you guys can see it. Right here, all these FEGs. You know, price has got to fill those areas at some point, and that it did today. So now it's hold on a minute. Let me go back. Now it's barely doing much of anything, as you can see right here. So I mean, it's pushing, you know, pulling back some, but still, I'm just probably going to be done for today. Taking that one trade. I saw that great opportunity and jumped in. I may take a look at the ES today. I'm not saying that I won't take another trade throughout the day, but as of right now, I'm going to take a break. So I appreciate everyone tuning in again, watching the videos. If you're interested in joining the Discord, people always ask, find that link down in the description portion of the video. Invite yourself in. Come over to the Trading Floor channel on the Discord server. All right, and join us on the daily during the US session. Where we as traders come together and we take screenshots and entries, post our trades on the Discord server, okay? And it helps traders out because people have a chance to be able to ask fellow members, you know, why did they possibly take that trade? You can get a good explanation why. And if you also want to join and become an elite member, people ask that as well. It's $6.99, you know, not $699, $6.99 a month, okay? Not a day, not a week. And you get a lot of valuable content, you know, especially if you become an elite member, because you get the trade breakdowns. And that's where there's loads of videos already posted there. It's where I discuss in detail my trades that I've taken so that traders can understand full on why I took that trade. So you get a full on mental process or thought process into why I took those trades. And even prior to taking the trade, my points of interest and what I was thinking, and then why I took the trade, you know, while I was in the trade, what I was thinking just as well. So, you know, I go into detail about those things. And if you have questions about, you know, is the elite membership, you know, a good opportunity, come over to the Discord, invite yourself in. The Discord's free. You can ask fellow members that are part of the Discord community currently, you know, those that are, you know, have joined the elite membership, which we have tons of individuals who are part of the elite membership. The elite membership, you get things too. You get the rewards. You know, you get the badges, the emojis, the priority reply to comments. You get the trade breakdowns, which is a great thing, as well as that video playlist. It's a list of videos that I've hand selected out of, I guess, almost 600 videos now that I put together in a linked list format in one of the posts that is only available to the elite members. Those videos are a helping tool, or I guess a learning tool in a sense, because a lot of people, they find and have found a lot of value, and it has aided them in their own trading to understand how I trade. I share with you, I explain, supply and demand and the way I look at it and how I trade it. So hopefully it helps you as well, and you can use it in your own trading. So again, the two biggest selling points would be the trade breakdowns and the video playlist. Okay, $6.99 a month. If you don't believe that it's valuable or don't know, then ask some of the current members that are part of the community. They'll let you know. They'll let you know how they feel. If it helps out, if it works for them. So ask some of the members, okay? But for $6.99 a month, I'm just throwing that out there because people ask me all the time, how can they, especially on the Discord, they send me a DM and they ask, hey, how can I join and become an elite member? For $6.99. Just click on the membership button on the, no, excuse me, I'll take that back. It's not the membership button. It's the join button or link on this video here, on any video on the channel, or on the homepage. You'll see somewhere near the subscribe or subscription button, you'll see a link that says join. Click on that. There's two tiers: the loyal channel supporter, but the elite membership is the one that offers you for $6.99 all the perks and rewards. Okay, so just wanted to throw that out there because people ask me that all the time. All right, everyone, have a great and safe trading day if you're currently trading. Again, I may be done today, I may not be. It just depends on what the market continues to do throughout the session. But again, I want to talk about support and resistance in this video, and primarily just break it down, the reason why I just don't take pullbacks to key areas of support and then take a trade off of a rejection at a support or resistance level. Okay, I look to trade supply and demand at the lower extremity or the higher extremity. Lower extremity if I'm looking to go long, higher extremity of a move when I'm looking to go short. All right, take care. I'll see everyone in the next one.